Deserved. On to the business with Brian. I'm going to talk about more about oil, of course, as the US and Israel's war on Iran continues. Asian economies that are dependent on Middle Eastern oil really in the firing line, aren't they, Brian?
Indeed, Stuart. One of those, of course, is China. Nearly half the oil it imports transits through the Strait of Hormuz. It normally buys some 1.4 million barrels of oil per day from Iran itself. Analysts are predicting serious headwinds for the world's #2 economy amid that looming energy crisis. For now, though, it's outperforming expectations. The latest data shows industrial output in China for January and February up 6.3% over a year ago, while retail sales were up 2.8%. That's 3 times the growth for the previous period in retail. Fixed asset investment, meanwhile, grew by 1.8% to start the year. That is after registering its first ever decline last year. Infrastructure investment up 11.4%. Beijing has been relying on its manufacturing exports to prop up growth amid sluggish domestic consumption. The latest figures mean the government is probably less likely to push ahead with ambitious domestic stimulus programs. But the effects of the Iran war are largely yet to be felt, as China's National Statistics Bureau pointed out on Monday. Take a listen here.
Conflict in the Middle East has caused troubling fluctuations in international oil prices. China has relatively strong energy supply capacity and a solid foundation to cope with market volatility. At present, though, there are many uncertainties affecting international energy prices, and the extent of their impact on domestic prices still needs to be monitored.
Yeah, a lot more on that, in fact, coming up in the next hour with Yenna Lee in Beijing. We'll be talking to her for Asia View. What about the markets, though, Brian? How are they holding up so far?
So crude oil prices continuing to climb Sunday night into Monday morning after Donald Trump threatened U.S. military strikes on Iran's oil export infrastructure on Karg Island if the country continues to threaten tanker traffic in the Strait of Hormuz. International benchmark Brent crude now trading at more than $106 per barrel. WTI over $100 per barrel. On the Asian stock markets, a mixed picture with Tokyo and Shanghai marking some modest declines. The Kospi in Seoul, though, making up a little bit of ground after big recent sell-offs. It's up just over 1%. Hong Kong's Hang Seng seeing some gains from that positive Chinese economic data. It's up nearly 1.5%. Here in Europe, markets opening higher, led by the tech sector, with energy producer shares gaining on those higher oil prices. London leading the way as BP shares gain the most amongst European energy manufacturers. Paris and Frankfurt all up slightly, though, to start the trading session.
And finally, for business, India, too, facing itself especially vulnerable to energy supply disruptions.
So, unlike its neighbors, India imports 90% of its oil, most of it coming through the Strait of Hormuz. The war in Iran has already thrown the country into crisis over mounting shortages of cooking gas. That's putting the government in a sticky situation as it tries to push for an end to the war while also pursuing a trade deal with the U.S. Rachel Griffiths has the story.
Anger on the streets of New Delhi. Protests erupted across India on Sunday as residents voiced their anger over a severe shortage of cooking gas, worsened by the ongoing US-Israeli war with Iran. India is the second largest importer of liquefied petroleum gas in the world and is suffering acute shortages of the fuel.
For a week, we've been running around for gas. They aren't giving us gas cylinders. The vehicle carrying the cylinders arrives, but they say it'll be delivered to our homes.
The protests come as the country faces its worst gas crisis in decades, with the government invoking emergency powers requiring refineries to divert more fuel for domestic use, tightening the availability for commercial users like hotels and restaurants. India said on Saturday that 2 of its ships carrying the gas have crossed the Strait of Hormuz, which has been all but closed for 2 weeks after the US and Israel launched airstrikes against Iran. India had initially refrained from criticizing the war as it seeks a trade deal with the US, its largest export market. But with fear spreading in its energy and financial markets, Delhi is now speaking out.
We have also called for avoidance of targeting civilian infrastructure, including energy infrastructure across the region. We believe that these are the priorities of a large part of the global community, since the impact of the conflict is being felt globally.
India imports nearly 90% of its oil, putting it among the Asian economies most vulnerable to a Middle East energy crisis.
complicated situation for India, especially there, Stuart.
Brian, thanks very much. Brian Quinn with business for us of